Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Today is Tuesday, the 7th of December, 2021. I'm just going to go ahead and bring up our high-risk investment warning. I'll keep this on screen for a few moments. And I'm just going to bring up now our market commentaries disclaimer. And here's our references. So we'll go through to the CNBC.com morning note, and then we'll go to MarketScope to do the analysis on the charts. And the CNBC note starts: European stocks expected to open in mixed territory. And this is as investors weigh new developments relating to Omicron. White House Chief Medical Advisor Dr. Anthony Fauci said on Sunday that the initial data regarding the variant was encouraging, though he cautioned that more information was needed to fully understand it. Stocks across the Asia Pacific jumped on Tuesday, bouncing back from Monday's losses, and that's as Wall Street rallied on optimism that the Omicron variant risk might not be as bad as feared. US stocks were flat in overnight trade. Meanwhile, investors are weighing the likelihood of the Fed removing its pandemic easing policies and hiking rates sooner than expected. Comments by Fed officials suggest that the central bank is likely to decide to double the pace of its taper to $30 billion a month at its December meeting next week. That's a big jump. It's more than I had initially thought when the Fed chair testified on Capitol Hill. He did say they're looking to accelerate, but a doubling is clearly a very aggressive change. So we just need to keep that in mind. Next week, Wednesday, that's the 15th of December, that's when the next Fed statement is going to be released, and then we're going to have the press conference, and also this month's Fed release is going to be accompanied with dot plots, which is effectively where the Fed officials see interest rates over the next short term, medium term, long term. Data releases today include German industrial production figures for October, Dutch inflation, and Switzerland's unemployment rate. No major earnings. All right, having said that, let's go through to our chart and see if there are any developments. And we'll start off with our weekly. Okay, so I want to zoom in here. All right, so this is the right side of the chart. This is what makes the analysis so difficult, right? It's easy to see what's happened on the left side of the chart, much harder on the right side. The way that we are analyzing the weekly chart is on a number of levels. The first level is in terms of a potential swing low. And last week's candlestick has given us the first of three conditions that we are looking for. And that condition is the lowest low in at least 3 candles. It's still very early in the week, but so far that condition is holding. And we're actually looking to see if there is a condition 2, which is price moving above last week's high. 15.509.34, 50. The truth is we've actually got a condition 2 here. This week is slightly higher than last week, but it really comes down to the end of the week. Where do we close? So we almost have to acknowledge that we're blind until the week closes out in terms of the weekly chart. because condition 3 is everything. Without that, we have nothing. And that is the candlestick closing above last week's high. And that will give us our 3 conditions, and that's effectively what's needed for what we call a reference candle low or a swing low. It doesn't guarantee anything, but without it, we're not going to move higher. So even if we get the 3 conditions, that doesn't guarantee a swing, but without it, we're certainly not going to get a swing. So that's what we're looking for. The stochastic is still lagging, so the slowing factor here is still got us as bearish, so we'll just take note of that. The RSI has pivoted, and it's heading towards 50. We will see if it gets above 50, and if it's above 50, is it going to hold above 50? And if it does, then I think the lag in the stochastic catches up. Then I think we get the 3 conditions, and then it's all about, well, is the market going to cooperate with that analysis and take us higher? You see, even though we are, we've got an idea of what we want to happen in terms of the analysis, it's really up to the market to cooperate with that. Nevertheless, all things kind of being equal, this is looking pretty good. The other level to consider is that we are at the support, which seems to be fairly significant. We've got support here, support here, support here, and support here. So there's no doubt that the market seems to be taking note of this area here, which is around, let's call it between 14.8 and 15,000. So sort of the zone here is kind of where the market seems to be valuing or considering value in the market. So every time there's some sort of dip there, the bulls come in. Let's go down now to our daily and see what's happening. And I think that this is a really important time frame for us, considering that we are, as I said earlier, blind in sort of quotation marks until the weekly chart, in terms of the end of the week, in terms of the weekly chart. So we're going to have to defer to the daily here. And you can see that there is positivity here on the daily chart in terms of moving out of our area of weakness into our neutral area. So that's positive so far. Now I just want to go through to the daily over here, because it's without any overlays. It's easy to see sort of the raw price action. And this is the key. This is the key. Again, where do we close today? You see, so we've now got price testing this this horizontal line that we've drawn in as a measurement stick, and of course that's the bullish measure. So it's really good to see that we're testing that. We've got this. Let's just put this in terms of our 3 conditions. So here I'm using this as our condition 1. You could use that as the measure, okay? But I've been stricter here. I've said, okay, well, the next candle, all right, failed at this point. Well, if it failed at this point, well, the bulls have to do better this time. So they have to take out where they lost control. So using that as the measure as for our condition 2. So we've got condition 1 and we've got condition 2 here. Let's take this arrow out. It's just going to confuse us for now. Now that we've got the 2 conditions, the big question is, where do we close today? Because if we close above it, well, that's the 3rd condition. So in other words, this might be a dip in an uptrend, which is exactly what we look for, right? Now, we've got a movement from the area of weakness into the neutral area. So out of weakness into neutral, that's a step forward. We've got movement from just a vanilla chart indicating a bullish start to the day. Let's just play devil's advocate here and say, all right, so we've got 2 out of the 3 conditions. What will it look like if we don't get the third? So the third condition, the most bearish way for that to look would be if we end up like this. So this is kind of what we don't want. So this would be a gravestone doji. It's effectively, here's the open. Bulls take price up to the high. At the high, they promptly lose control, and then the bears take over and push us down. So that would be, I think, quite devastating to the dip in the uptrend type of scenario. So we really just want to see where this is going to close. Peter's just got a comment here. Let me just see. We need a center rally. Yeah, so there is, I guess, an anomaly. Hey, Katie, good morning to you. There's an anomaly in terms of a Santa rally, because if markets are efficient, should there be a Santa rally? And of course, that's a question in of itself. But yes, I think that is a good point, Peter, because there does seem to be some sort of anomaly in terms of a Santa rally. More than that, by the way, there's something called the January effect. I don't know if you guys have heard the January effect. I'm not sure if any of these, by the way, are statistically sound, but it's just kind of various suggestions, I guess, put out there. And the January effect is that typically there is January tends to be positive during certain days because of previous market action. There's been various types of reasons put forward. One of the reasons just coming to mind now is that it could be doing with window dressing, and it could be something to do with even taxes, tax control. Nevertheless, I'm not sure, Peter, just how statistically plausible they may be, but they may not be. I need to just check up on that. As you and I, yeah, certain days, I've got to take a look. I think, I can't remember the dates. Let me just see if I can find some more information on that, KD. I'm just kind of running off memory here, and at the moment, it's not all there. So let me just double check, and I'll tell you guys about it tomorrow. You can even email me, and I'll look it up. So, and by the way, Katie, just please don't take it as a given, right? Because I think it would fail just as many times as it would work, kind of a thing. All right, let's go down to the hourly here. And let's just see what's happening on the hourly. So this is our okay, so this is the resistance we drew in yesterday. So it's a key level. I think that's something that's worth just mentioning. The key level because it's hit resistance here once, twice, 3 times, 4, 5, 6 times, and it's been it's caused a price reaction all of those times. So that's something to keep in mind. Another thing just to keep in mind, by the way, is the way that the stochastic has behaved at these resistance levels. For me, that's the most fascinating part of it, is that it hit stochastic, resistance kicks in, so we roll sorry, hits the overbought. I beg your pardon, not overbought, it hits the upper quintile. It brings in the sellers, we roll out of the upper quintile. We hit the upper quintile, brings in the selling, we roll out pretty quickly. Again over here, we roll out. Not so much this time. This time looks to be different, and I say that kind of almost with a smile in my face. Anytime somebody says to you, this time it's different, it's probably time to pack up and run for the hills, right? But the truth of the matter is there does seem to be a stronger momentum here. And the reason I say that is you can see that the stochastic is building a base, so to speak, in this upper quintile area. And as long as it stays in this upper quintile area, then I think this resistance is going to go. Then I think we'll take it out. Remember that the signal was given yesterday. Okay, so we kind of look at it, but there was a strong rally on Wall Street yesterday. We are getting to a point where we're crossing from the area of weakness into the neutral area. We are testing the condition 3, so it's all looking pretty good. Again, condition 3 could fail. We don't have it until market closes. So, but the key now for the rest of the day is for us to monitor the momentum, right? If we drop out of this 80 area and then we carry on going down, that's no good. It's no good. We've got to hold, and if we can hold this this momentum, if the market participants, the short-term market participants, continue to push prices higher, well, that would reflect on the stochastic, because remember what the stochastic tells us. It tells us where in the range. So let me just bring up, we are looking at a 15-day range. And what the formula is saying, it's saying over the last 15 days, I beg your pardon, 15 candles. So it depends on your time frame. So on this particular chart, it's 15 hours. So it's telling us over the last 15 hours, price is now pushing up into the top 20% of the range over the last 15 hours. Well, that's bullish momentum, right? So as long as we hold this level, that would be bullish momentum, and we should break this resistance. So that's the kind of challenge for us today. We're going to monitor this momentum here, and as long as we stay here, well, you can really see what price is doing. It's pushing now above the resistance, and I would suggest as long as we're above this 80, there is a very good chance in terms of probabilities that we're pushing even higher. All right, with that all said and done, if there's any questions, please go ahead and type those in. What I'll do is I'll just see if I can find some information on these market anomalies. In terms of the center rally, there is something on Investopedia, by the way, and I'm going to just include it in our newsletter. I'm going to write something on our newsletter next week. I'll put something about the center rally in. All right, cool. Peter's just saying watch and wait. So look, I'll tell you guys, I do have a long position on the DAX, just to kind of be transparent. We'll see if the momentum holds. So we'll see if it works out or not. All right, let's end here. And of course, if you guys need to get hold of me, you've got my email address. Thanks very much, and thank you very much for joining this morning.